Okay, Felix, can you shortly, very briefly introduce, SmartValor to the audience?
Sure. SmartValor, we're a financial company. We're based in Switzerland, and we are focused on alternative investments. So venture capital, private equity, real estate, and that what we are making, we're making these funds on that side. We're making them accessible on the blockchain technology via tokenization. So we create the tokens, and that's what you can invest in. Thereby, we're overcoming many of the problems that the traditional financial industry has. The banks, expensive, slow, and limited to certain geographies. And this is what we're trying to improve, and thereby revolutionize really the style that you can invest and the asset classes that you have access to.
So then, in a nutshell, I mean, is this platform for tokenizing assets, financial assets?
Yes, yes. Each token is becoming a security actually.
Yeah.
So it has the same rights as an equity or obligation or derivative, and in front of the law. And everyone is also backed by a physical asset.
Okay, so how do you connect it with the real world though? Because there's already a traditional market for every asset classes, right?
Yes.
They have big market. It's very historical. They have long years of expertise and experience, and you have to compete against those guys.
Yeah.
Well, and the regulation, for instance. I'm not very familiar, with the regulation, but there must be, some conflict with the regulation when you tokenize actually an equity or tokenize a bond or tokenize, a private investment, for instance.
Yeah. Well, there is not really a conflict. You're just, the regulator just wants to make sure that everything that is working for the traditional side is also kept for the new way of wrapping.
Okay.
So the suitability, appropriateness, the KYC, know your client, the anti-money laundering needs to be fully made sure that it's made in the good way.
Right.
But that is exactly why we're not trying to be against the regulator and do something new and just crazy. We are actually regulated by the FINMA, the Swiss Financial Market Authority, and we're fully regulated by it. So we are actually undergoing the same procedures as, for example, the investment bank is doing when they do the IPO. We need to undergo that process to create the ICO or to generate these security tokens.
Okay, so then what about the other countries? I mean, what is your expansion plan? Because in Swiss you're already regulated. I'm not so sure, but EU is not the same as Swiss, right? And the United States definitely is not the same.
Exactly.
And most probably you would also have some plan to move into Asia. It's not the same. So how are you going to do it? I mean, plan it.
On that side, actually, we're pretty close to the Swiss banking sector, right? In Switzerland, banking is like the big industry. And therefore, actually, there's a big advantage. You have fairly good access to European Economic Area, but it is not the same exactly. However, we're envisaging next year to apply for to request the banking license in Liechtenstein.
Okay,
Liechtenstein
that's
is
Swiss?
part of it. No, it's just next to Switzerland. It's just a very, very small. It's basically a city between Austria and Switzerland, and that's where but that is part of the European Economic Area. So that is making the link between the two to give us full access. However, already out of Switzerland, we do have access into the European Economic Area and in Asia as well. Basically, in this quest to democratize the access to this financial services and these type of asset classes, we're of course keeping in mind that right now, 2/3 or even more of the globe are excluded from it. You need to have access to a bank. In Korea, you do have it. In some countries in Asia, you do have it, but you have many which are excluded.
Right.
Even in Europe, even within Europe, not every country you are getting access to this alternative investment.
Okay, so you want to cut out the middleman, right? In this
Yes.
case, it's most probably investment banks, right? And then they charging this high fee, right? It takes time, right? So you want to expedite it, at the same time you want to lower the fee, right? So my next question is, give me an example about equity. How is it actually really working? This tokenization.
Well, the tokenization is we're creating a token, and in the back of the token you've got a smart contract. Now the smart contract is really what is ruling everything. You can have a fairly simple contract which is used for a payment token, so that becomes then a cryptocurrency. then it can get a little bit more complicated if you're talking about utility, and then because within that contract you need to program it. What are the rights? What can it do actually?
Right.
And how does it do what it wants to do? Now on security, it basically needs to follow a couple of rules which are already existing in the traditional equity markets, right? Only by tokenizing a security, it still remains a security with the rights. So you need to program that into that smart contract. And for that you need the IT specialists. We have blockchain programmers and the crypto.
But my question is more like, because it's a security, so usually security are traded on security markets.
Yes.
And that's not going to be changed, right? On top of that, you tokenize it. So the token is traded in the token market, exchanges I'm talking about.
Yes.
I mean, it's getting very complicated. You understand what I'm saying, right?
Sure,
I mean, on one hand, actually it's, traded on the security market. On the other hand, it's traded on the token market. And I mean, to me, there could be some kind of, conflict to be happening. You understand what I'm saying? Because, because the security is the rights, right? You have the rights in the company.
Yeah.
And the token, it's kind of, wrapping up the security, and you
but
have
it is still keeping the rights. That is the tricky part of it, and that is what we are needing to create. But maybe to make just a comparison, for example, if you have a derivative of an equity, an option, it is not the same thing, but it is tied to it, so they are connected. The development of one is deciding on the development of the other one. The one can give you right to the other one, so they are legally connected. It's a contract basically.
But I think it's a little bit different because option. The reason we call it a derivative is because it's derived from the underlying asset, right? But token is actually if you tokenize the security. Actually, the token is a security, to my view. Option is not a security.
Oh, option, it is. Yes, it is a certificate. It is a.
Yeah.
It is basically. It's not an equity, but it is a security still.
Yeah.
So it's just a.
But the token is not a derivative. That's what I'm saying. You cannot say that's the derivative.
It actually becomes a security. You have three different type of tokens. You've got the utility, usually giving access to some service, the payment as Bitcoin, just a currency, and then the security. Now, the security, of course, is legally the most complicated one, and that does not yet exist. So there are some companies which are, as us, in the first mover wave, developing it. They are all focused on equity tokenization. We're focused on alternative investments, so on fund tokenization. But in the base, the thought behind it is similar. We want to use the advantages of the blockchain technology to make it cheaper, more accessible, and to a wider group. That is similar with the other companies.
Okay, you said you're more focused on the fund management tokenization, right?
Yes, access to the fund, so investment in the fund.
Okay, so how does that tokenization work?
So basically, we're going into a partnership with the issuer of it. So let's say a venture capital fund. There we are becoming their legal counterparty, and we are basically fundraising together with them in parallel. Let's say. Now the part that we are raising, that part is then being tokenized. However, in the background, of course, the fund does get the currency that we raised because that's what a venture capital needs to invest in the companies. So they are getting the money, and we're creating a token which is the access right to the fund itself. That is what the investor is getting. Now, where it gets interesting is that in the alternative investment range or in the asset classes all over, you do not have a secondary market. So if, let's say, after a year you want to get out, you're forced to get out of that investment, you need the money, it is very difficult to sell it because there is no market.
All right.
Now, either the issuer or your bank is trying to help you, but usually you get below net asset value, so you need to, you need to take a haircut in order to get out of it, which is not so good. Now, with these tokens, we are creating a market. The people who invested in the token, they do it over our marketplace. And that marketplace is also running throughout the lifetime of the fund. So if they want to sell it, they can either list it as long as there's many people buying and selling. It works like an exchange. And if it's more illiquid, then you can create actually an auction system. And that is what we have developed in order to find the fair price.
Would venture capitalists like that, you know, if...
Absolutely, yes. That is actually a huge problem that they are having. They would like to offer liquidity, but they cannot because the money is tied up in a company. You cannot just take it away from that company, right, because you need that company to thrive and become successful in the future.
Right.
So that is this problem has always been around in venture capital, in private equity, even in real estate. In real estate funds, some are traded. The other ones, it's locked down because you cannot just sell a small part of a house. The house is the house, or an office building is a big building. And this is actually what we are offering to them as well, and their owners. It's not only about the fundraising, but it's also, if we didn't raise the fund, but the fund itself was selling parts of its fund to traditional investors, and they want to get out. Either they do it the old school way, which is really not efficient, or we are then also taking that. We could actually make a book building for that part of it as well, and then tokenize that part as well. How become reality and not, and when, that is up to the future to see.
So do you already have, I don't know, because platform is still not, I mean, it's not launched yet, right?
Yes, we have a demo now up and running on SmartValor.io. People can have a look at it, and we've got some examples there. And actually, right now we're onboarding the first pipelines that we will launch in October. October is the official launch. By then we will already represent the assets, and in October also start the book building and representation of it, and actually get going.
Okay. But I mean, you helped these asset managers before, right? I mean, that was your professional kind of expertise areas, right?
Yes. So I have been working 8 years in one of the big investment banks in the world.
Right.
So I come from investment structuring and corporate finance. On the corporate finance side, I know how the IPO is run, and I have created the information memoranda and all these kind of things. So we do have a background on that. Also, our CEO, Olga Feldmeier, she's coming from one of the two big Swiss banks,
okay,
and there she was also market responsible. And this is basically where the idea comes from. We know what we're talking about.
But
we see the
problem that I can, because I understand what kind of especially the liquidity part, right? Yeah. Because once you stock, right? It's not easy to liquidate when you need the money, right? And sometimes the investor will be like, oh, it's not going well, so yeah, I just want to dump it. But it's very hard to do that as well, right? But if you tokenize it, it's different because you will have hopefully you will have a liquid market, But then my next question
will not
is
be as liquid as the equities, but still, it is something that right now is just not existing.
Right, but the token, I mean, is it listed on an exchange? It's not, right?
Yes, everything that we're launching is listed on our exchange.
Right.
So you can trade it over our platform.
Okay.
And we're also connected to others. So our interest is, of course, to create volume on that side.
Right. But then my question is, I mean, there could be, I mean, the problem that actually venture capitalists, they should be kind of, interested in getting crypto as an investment fund, right? From the usual money, right? Because, when they get the funding from the token sale, they will get most probably Bitcoins or Ether.
No, they will get it in. It depends on the setup. For example, if we have we do talk with crypto funds, so they are agnostic. They can get the money in Bitcoin and Ether, but in Swiss francs and dollars as well. No, they don't care. However, a venture capital fund, if it's based in US dollars or in euro or in won, then obviously they need that money in that currency.
Okay.
We're doing the transaction. They get the currency that they need. We do the transaction, and we are then taking care of the token side.
Okay. So what about the liquidity of the exchange? Because right now you're assuming that actually the liquidity on the exchange, your exchange, will be very liquid. But what happened? I mean, what makes you confident that it will be liquid? That, if I want to, get out, exit, and I want to, sell my token, how can you make sure that actually somebody will buy it? You understand what I'm saying? Because this is different from the...
Well, you need to build up a community, that's for sure. We're building now a community that's like this preview obviously is there so that people get familiar with it. At the same time, we're having a pre-sale now, and you can get access via our token as well. You don't need our token, but it comes with many advantages. So there we have a big community already building up, and this by October, and then hopefully thereafter even more, it is generating just a user community. Mm-hmm. On blockchain, everything is community based. It's all about how many people are using your platform. Mm-hmm. So this is what we do internally, and externally we're also connecting to other exchanges. Because if for the transactions of fiat into cryptocurrency or the other way around, we do need to have, if somebody comes with a very big ticket, then we will not have enough volume to manage it. Yeah. That's why we need to create a partnership with others as well.
Okay, so and where comes your profit from?
The profit comes from two sides actually. There is a fee for acquisition. It is similar as in a bank. If you buy an equity, you need to pay the bank a certain percentage. However, of course, the amount is not at all comparable to that of the traditional market, which is huge and just ridiculous. Mm-hmm. Now we are much more efficient, and that's why, of course, the prices are extremely low. Okay. So that is one thing. There, with the volume, of course, we're getting a partial profit on that side, and on the other side, the issuer, which is doing the fundraising on our platform, is providing us with a commission as well on the funds raised on our platform. Of course, only on that part, and there we're very transparent and very straightforward. Basically, it's like the investment bank is working in an IPO. Just think about that, just much more efficient, because we are just faster, and this is just a much more secure way of getting access to this new method of fundraising.
But is that the only thing that you do? Like, you tokenize the asset and the fund, I mean, and then you provide the marketplace and you get the commission out of it. Is that all, or do you also, because in the process of raising the fund, it's not only about connecting it to the right investors, right? Yeah. You have to represent the investors, and you have to also help the venture capitalists or the asset managers, right? I mean that should be your role, right?
Of course.
But the reason I'm asking this because iBanks, I mean I know that they ask for prohibitively high fees, but still your fees wouldn't be that low. Because there's a lot of process going in there, right? And you have to get paid by it.
Oh yeah. Basically, that's where if you think about it, what we are trying to do, this is similar to what a bank is doing. Actually, it's much more than a bank is doing.
Okay.
For this, you would need to have, I don't know, 2,000 people working for you. Now we're doing a partial system in-house. So first due diligence is done in-house, then we represent the company, and then we're engaging the community, checking how much interest is there for every asset class. And only once it reaches a size, the community, actually the investors like it, they want to invest in it, that's when it gets into the second stage. And there we're actually including the community. Imagine our user base as many thousand, one day hopefully 100,000 or even millions of investors and people, actors there. Now all those people, they have knowledge, they are proficients. You have the lawyers, you have the accountants, you have everything in there, right? Right. So they can be active and they can provide their proficiency for the due diligence process.
All right.
For that,
so it's not only you guys doing it, right? I mean, you're going to make the community participate in this process.
Exactly. This is what also makes it more efficient, more price effective on our side. So the investor needs to pay less. At the same time, the community is establishing the good players. You can actually earn a reputation. The work is cross-checked by others. It actually works similar to as a blockchain transaction with the proof of work. The different actors are proving each other or checking each other.
That's not a voting system, right?
It's not a voting system. It's a quality check system. It is basically any process has this. You have the 4I principle. If you create something, then I'm checking it. Or the other way around, right? Mm-hmm. To be sure that I didn't make a mistake, you're checking it. Mm-hmm. So
how do we make sure that that moves very smoothly? Because there needs always to be a maker and a checker, right? Yeah. I mean that's the whole purpose of it. But if there's only a maker, there's no checker available. I mean, how do you manage that then?
Oh yeah, then it doesn't go through. It needs to be checked by someone.
Is there like a perimeter, like how many checks it has to go through, for instance?
it is not yet set 100% because every check has a different complexity, different amount of work. You know, some things just need to be checked in a very small way. The other ones are very complex and important decisions. There, of course, you need to have much more.
So then, in that case, you know, I'm also, because you know there are similar kind of concepts out there, and when it comes to, I mean, even a lending platform, okay, because you will have these, you know, for a loan you will have an underwriter, for instance, okay.
Yeah.
I mean, the assumption is that these underwriters or these investment advisors are actually very good. But how do you make sure that they're actually good? I was always wondering, you know, how you guys make sure that, you know, they're really good. You understand what I'm saying, right?
Well, let's look at the financial world, the traditional financial world. Do you know that your advisor who's coming from another bank is good or not?
That's the reason why actually they use these brand, you know, banks, right?
Exactly.
Like UBS or...
Because you think that, for example, you think that UBS
I want to
is
believe,
good, but you have no idea if the person is really experienced in it or not. So,
but they have the reputation risk.
They have the reputation risk, exactly. Now, within our community, you're establishing your reputation yourself. So it is basically like a